Money Monday is sponsored by Huskey Financial.
Well, last week we discussed inflation and how it's forcing prices up on just about everything. Well, here to share how that's affecting the consumer directly is Stephen Huskey, president and financial advisor of Huskey Financial, on our new Money Monday sponsor. Thank you so much for joining us. Definitely want to talk about inflation. Also want to talk about a few other things, but maybe you could help us understand just what the impact of the inflation that we're currently experiencing now has on people's portfolios.
Certainly. Well, especially for those that are in retirement and even those that would really like to grow their assets, those in retirement are having to adapt in different ways. And there's only a few really things you can do. The first one is you can spend less money because things are now more expensive, or you could be more aggressive in your portfolio. And that might not be something you want to do if you're trying to preserve capital.
Right. Is there any upside to inflation on a portfolio?
It's really just one of the risks that you need to manage. The upside is that you have now a better chance to take more risk and have bigger upswings. But with those large upswings can also mean large downswings.
And some people would argue that it's better to have inflation than deflation. Is that a correct statement? What caveat can be applied to that?
Yeah, I mean, I would say it's better to have inflation than deflation. It's all about the correlation of assets that you have in your portfolio. You know, there's the market risk that you can have. There's equities, but then bonds, they do not really correlate well with the market. And so if you have a good correlation between the amount of equities you have in your portfolio and the amount of bonds, you can compress the amount of inflation or deflation that's going on in your portfolio.
All right, well, let's talk a little bit about some macroeconomics here. So for folks who are maybe new to investing, what are some of the things that they need to know, and particularly in the environment, in the economic climate that we're living in today?
From a planning perspective, macroeconomic principles ring true in the fact that a lot of folks have what we call microeconomic relationships with the professionals on their team. They're bankers, they're insurance agents, they're mortgage representatives, CPAs. Those are reactive relationships in most cases. You got to get your taxes done, you go call your CPA, you got to get a mortgage refinanced, you call your mortgage broker. But a lot of advice you're getting from these people, while well-intended, they may be conflicting with other professionals on your team. And so it's up to you to decide who to listen to. So from a macroeconomic perspective, a good financial planner or advisor can help lead the charge with all these other professionals on your team, create one cohesive message that then can be communicated with them. So we all work in the background, literally and figuratively in one room with you to plan for your best intentions in the future.
And those are the services that you provide at Huskey Financial.
Certainly do. Yeah, I want to make sure that I know the ins and outs of the relationships that you have and making sure that we all coordinate together to help better your experience.
Yeah, among what are some of the other services that you provide, and what are some tips that you have for people who are maybe interested in placing their money somewhere and to watch it grow over the next several years?
So some of the services that we provide are financial planning as a whole, a holistic perspective. We do help with investments, giving advice on different portfolio asset classes because diversification and asset allocation are extremely important. We also help with making sure that a family and a household or a business is well properly protected. You know, most people focus just strictly on the investments and the performance of that, but risk management is just as important of a piece when it comes to real cohesive financial planning.
And we certainly learned that the hard way a little more than 10 years ago when the economy was turned upside down. So would you say that we've learned a great deal since that time and have now been a little bit smarter, a little bit more savvy this go around?
I think so. I think people still are willing to take a little bit more risk, but having the protective piece on your balance sheet, when you have those guarantees or some non-guarantees associated with either fixed income, bonds, cash value life insurance, whatever people want to put in their portfolio, it allows you to be more aggressive and take greater risks and get those large upswings, those home runs, instead of just a bunch of singles and doubles. So yeah, I think we learned a lot from 2010, but people are still hungry for returns.
Yes, yes they are. Yes, they are indeed. Well, Stephen, I want to thank you so much for joining us. And for people who want more information, how do they find you?
You can find me at Huskey Financial on Instagram, Facebook, and on LinkedIn, and huskyfinancial.com. That's HUSKEY financial.com.
Well, Stephen, I want to thank you so much for joining us on this Money Monday, on this Huskey Financial Money Monday. It's great to talk to you.
Thanks so much. Appreciate it.
We're back after this.
Money Monday is sponsored by Huskey Financial.